raises over 3,200 crore rupees from 147 anchor investors, 35% of allocation made to 21 domestic mutual funds.
E-commerce service startup Point AI has raised 47 crore rupees in a pre-Series A funding round that was led by Yali Capital, Lip Bhutan and Premise Capital. The recent funding will enable the firm to accelerate product innovation, expand its market presence and strengthen its technology as well.
Drip Capital, a digital trade finance and B2B e-commerce company, has secured a $50 million committed credit facility with an additional $25 million accordion feature from Toronto Dominion Bank. The facility will support the company's buyer finance program across North America while reinforcing its leadership in cross-border SMB financing globally.
Those are the headlines that we're tracking for you today on Startup Street. Now, our top story today: India's once celebrated craft beer startup Bira 91 is in the middle of a serious corporate and financial storm. Employees of its parent company, B9 Beverages, have now taken their grievances to the central government over unpaid dues and tax violations. Rachna Dhanrajani joins us with more details on this story. Rachna, what's really going on at Bira? More troubles mounting?
Well, it's been a rocky year for B9 Beverages. The company, which renamed itself as a public limited firm last year ahead of a planned IPO, has instead run into mounting losses and growing financial distress. Now, around 90 current and former employees have written to the Ministry of Labour and Employment, the CBDT and the Ministry of Corporate Affairs, alleging 7 months of unpaid salaries. The letter also accuses the company of not depositing around 50 crore rupees in TDS, delaying PF contributions since April 2024 and failing to clear gratuity and vendor payments. Adding to the gravity of the situation, employees allege that B9 Beverages has liabilities of around 1,400 to 1,500 crore rupees, including 950 crore rupees in debt and 150 crore in unpaid statutory dues, 300 crore owed to vendors and over 50 crore rupees in employee dues. They say the company no longer has a functional office due to unpaid rent and that CEO Ankur Jain has made no formal communication. Employees also say that over 600 families are struggling to meet daily expenses, accusing the management of repeated false assurances. They've urged the government now to investigate B9 Beverages and freeze directors' assets to secure dues. At the same time, investors including Peak 15, Sofina, Six Sense Ventures, MUFG, Tiger Pacific and Kiran Holdings have flagged concerns over Bira's burn and weak financial performance. Soon after the employee letter surfaced, which was a couple of weeks ago, investors moved to oust CEO Ankur Jain. Japanese brewer Kiran Holdings and lender Yali Capital have since taken control of the beer cafe business, which is Bira's profitable hospitality arm under its subsidiary Better Than Before. Sources now say that the move is meant to protect the only profitable vertical if B9 faces liquidation. CEO Ankur Jain has challenged the takeover in the Delhi High Court, saying the matter is now sub judice. We reached out to him and the investors for a comment but have not received a response yet.
Right, Rachna. Many thanks for those details on what's brewing today. India's intercity travel landscape is getting a major upgrade. IntrCity Smartbus, the country's leading next-gen bus network, has raised 250 crore rupees in a Series D round led by A91 Partners. The fresh funding will help the company double its fleet, expand deeper into Tier 2 and 3 markets, and enhance safety and customer experience through advanced technology. With a 1,000 crore rupee turnover target for next year, IntrCity is betting big on transforming India's long-distance travel into a smarter, safer and more connected journey. Joining me now to discuss this further is Manish Rathi, the co-founder and CEO of IntrCity Smartbus. Manish, thank you so much for taking time out and being here with us on Startup Street. You know, you've raised this 250 crore rupees in a Series D round, right? And it marks a major milestone for IntrCity Smartbus. If you could sort of tell us how this infusion of capital will help the company accelerate its long-term vision of transforming intercity bus travel in India and, you know, what sort of new opportunities does it open up for the brand?
First, thank you for having me. Besides having, I think we consider this investment in the company, not just in us, but a big validation of how the road travel in India, especially the long distance travel, which with buses is transforming in India. I think we see that the future of mobility in India, at least from a long distance, to be predominantly on the roadways. And this investment kind of helps us to build up that next 5-10 years kind of a infrastructure, be it across from a point of view of how the customers travel, technology, safety, you know, and all of that stuff. So we would be using this, you know, we would be using this capital to look at how further can we transfer bus travel in the next 5-10 years.
Sure. And you've spoken about plans to double the fleet and aim for 1,000 crore rupee turnover by next year, right? That's quite an ambitious target. Which regions or routes will drive this expansion? And how do you plan to maintain efficiency and profitability as you scale up?
Yeah, so of course, that's what the word you said is the challenge, right? That's what the challenge is across is how we grow and how we maintain our quality of delivery. So with regards to the growth, we are increasingly seeing that people, travelers, or even in the tier 2 and tier 3 towns, are aspiring for good services, technology driven services, and that's where our growth, the new growth is kind of coming across, be it whether we call across connecting coastal Andhra Pradesh or the regions of Madhya Pradesh, things across is in that part. These are where our next growth is coming around. I think with regards to maintaining the quality, we have a very set platform. It is primarily technological driven, and we believe that technology would help us to kind of maintain the same quality levels which we have delivered to our customers till now.
As you pointed out, technology is key to your business model, right? So a big focus of this fundraise is on enhancing your technology and safety. If you could elaborate on what specific innovations, whether it's fleet management, tracking, or passenger safety, that you are going to be introducing to deliver this smarter, more reliable travel experience.
Yeah, I think, so besides, so tracking, fleet management systems and all of that stuff, which we have already developed in the last 5 years, which I think, but definitely we are going to know. What we are really looking across is that how can we relook at some of the features around it, especially in terms of building up safety, when it comes into the accidents, fire, things like that. Or how do we build up, give a better environment, comfortable environment inside the bus. All of that, requires to be, first of all, built up into the system, and then second, managed and controlled, using a daily monitoring system. So that's where a majority of this fundraise is going to go towards that. As a business, we are a profitable business. Quite honestly, we do not require money to kind of run our business, but this money is going to go to enhance the capability of the long distance travel buses in India.
Sure, and you're projecting a 50% year-on-year growth and targeting this 1,000 crore rupees in turnover, right? What's sort of driving this momentum, and how confident are you about sustaining such strong growth in a competitive market? If you could take us through where your revenues are at currently and where do you hope to end this year?
I think we would end up across, I think we would reach around about 720, 750 nearabouts across us in that way. Last year, we did about 520. This year, we should hit about 750. And hopefully in the next 12 months, we can stretch ourselves to 1,000. I think the reason of our confidence is kind of coming around is just the growth opportunities in the road travel, which we are seeing that. It's not just us which is growing. The entire road travel in India is increasing at a phenomenal level. People are preferring this mode of travel, especially the majority, even 90% of Indians are preferring this mode of travel, as the cost of travel, especially the door-to-door cost of travel in the buses, seems to be competing across with trains and those things around. So buses are becoming, and that drives our confidence that, we should be able to achieve this revenue target.
Sure. So buses are the preferred mode of transportation that people are choosing more and more. And you've also mentioned expanding deeper into tier T and 3 markets to improve connectivity out there, right? So how are you adapting your model to suit travelers in these regions? And what kind of demand are you seeing from smaller cities across India?
Especially, the good thing about the tier 2 and tier 3 towns is there are a lot of aspiring customers out there who kind of are looking forward to kind of good services coming to their towns. It's not just because they're a tier 2 town. I think that's what they are kind of really giving across a big kind of a thumbs up to our services. With regards to how we do around is, definitely when you're going into these interiors, in India especially, you have to kind of adopt to the regional ways, regional languages and those things around. And those are the technology, the AI and all of that stuff is really helping us out. The network connectivity is improving. So all of these things are really driving all this adoption in tier 2, tier 3 towns. But there are definitely a lot of aspiring customers looking for good branded, good quality services to be offered to them.
All right, if you could quickly tell us, we're running out of time, with sustainability becoming a key part of India's transport story, is Intercity looking at cleaner fuel alternatives or electric buses as part of its next phase of growth?
Absolutely. It's just that, we just hope that the product just needs about a few years of maturity to kind of come in around. But once that comes in, definitely we are very excited about this, the new buses and those things around. Only thing across is that, few pieces needs to, few edges needs to be kind of fixed up, especially for a long distance, let's say a travel of 500, 600 kilometers of journey. Few things needs to be fixed up, but we are very confident that the technology in the next 1 or 2 years, the EV technology in the next 1 or 2 years will come its way.
All right, so sustainability also there, a big focus. All right, Manish, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you. Thank you for having me.
All right, from logistics, we'll move to e-commerce, where e-commerce service startup Point AI, earlier known as Try and Buy, has raised 47 crores in a pre-Series A funding round that was led by Yali Capital and others. Now, this is going to enable them to accelerate product innovation, expand their market presence, and also strengthen their tech capabilities. Now, Point AI's tech delivers real store shopping experiences for online customers, which allows them to virtually try on products, interact with virtual salespeople, and so on. Its client portfolio includes Amazon SPN, Flipkart, Myntra, more recently Rakuten as well. But for more on the company's plans ahead, joining us now is Nitin Vats, the founder and CEO of Point AI. Nitin, thanks very much for being with us here on Startup Street. Before we get to any of that funding, tell us about this rebranding. I mean, why did you decide to change the name from Try and Buy to Point AI? And what is this perception shift you're hoping to achieve with it?
Thanks for calling for listening to you. So we started this vision to make the digital twin of human, digital twin of product from the very starting. And if we make the digital twin of human and products, then e-commerce can be one application, social media can be other application. So we developed a technology and we made the patents for the generalized vision. So this was our vision from the starting, but we launched first product that was an application for e-commerce. So we thought that Try and Buy should be the right name. But now, because we have achieved and we are going into second phase when we are going to offer the complete suite of our product. So I think Point AI is the more relatable name. And second thing, if why Point AI? Because we say Point AI is the AI with precision. So if you see all the other companies, all the biggies, so they are struggling to get B2B clients because the AI that produce result, it's not of that quality, not of enterprise grade quality. So, but we worked on the different technology. We started much before when OpenAI also came in picture, like came in market. So we have our homegrown technology called Simulation AI. So by this technology, we are able to produce very precise result. So we thought that Point AI should be the right name.
Well, very briefly, how are you going to deploy this 47 crores that you've now raised? What are the key areas that you'll strengthen now that you have the money?
Okay, so we developed a technology and research already, and with the limited funding, we made few products. So there are other set of products. So one portion of this money will go in refining those set of products. Second thing, because we are research based company, so we are to continue our research. And second thing, global expansion. So for example, like right now we are focusing on like Middle East and C market, and next 6 months we will focus on Europe and US. So mostly in three key area: one, continuous research; second, refining the product; third is global expansion.
Well, let's talk about that global expansion then. You're saying, in the Middle East and Southeast Asia, and you're now looking at, the Western markets, Europe and US. What will be the go-to strategy there to scale beyond, the existing partnerships you have?
Okay, so more or less all the big e-commerce company, they may be any geography, they have same set of products, same set of requirement they have.
Yeah.
So we have got enough exposure with the top guys in India and top guys in Korea and Japan. So we have figured out that same set of problems the other e-commerce companies are facing. So when you propose the right solution, it's very easy. So the basic idea is like we have figure out like 10 geography that will cover most of the part of the world. So very first we want to pick the top guy from each geography, and so this is our vision for next 6 months. And for another 6 months, our vision is to grow horizontally. For example, if I pick the top guy in Korea, and then I can capture the rest of the market. So that's how we want to propose our solution. Yeah.
Okay, so both deepen your presence in the markets and also look at newer markets in the next 6 months. But, quickly give us a sense of financials in terms of how the company is doing. What kind of revenues are you clocking in at the moment, and how's profitability looking, and the trajectory that you have for the coming year or two?
Okay, so we have like companies signed roughly 1 to 3 years contract with us, and we already have like a 3 years signed contract worth $19 million. And if I say the profitability, so if I compare with my API cost with OpenAI or Google, so it's like roughly 90% cost savings there. Even then, we make some 70 to 80% profit. So mostly our money goes for the research and the future product. If we don't consider that, then definitely we are EBITDA positive.
I see. Finally, how do you see the company really evolving from here? I mean, are you looking at diversifying offerings further, or, what's going to be on the horizon, say, 5 years down the line?
Okay, so 5 years down the line, we want to become a platform that's for end-to-end solution. So if I categorize the platform, so there are three kind of platform. One is for small seller like Shopify and other guys. So second layer of platform that for the brands, that's Salesforce. And third, the big e-commerce, so they develop their technology by themselves. So the technology, when I say that this is limited to making the website and app, but for other requirement like media creation, intelligence, so they depend on the other guys. So we are making a platform which will serve for end-to-end requirement of all the e-commerce, and it's not just for the small seller, but it's for the mid-size and the big e-commerce. So right now we are why we are targeting for the big e-commerce, because e-commerce companies have big research team, and all the top guys reach out to them. So if they are opting our solution and over the other offering, so we have proven our point and we understand the problems. Yeah.
All right, Nitin, we've run out of time, but thanks very much for joining us here today. We wish you the best with your project.
Thanks.
On that note, it is time for us to head into a short break. But coming up next, Urus secures 20 crore rupees in funding to capture the sweet spot of the growing confectionery market in India. We speak to Rajesh Sunit Jain, the founder and CEO of Urus, to learn about their growth outlook and more. Stay tuned. Welcome back. You're still with us on Startup Street. Urus Confectionery has raised 20 crore rupees in funding led by Fireside Ventures to tap into India's fast-growing confectionery market, especially across Tier 2 and Tier 3 cities. The company plans to build a fully automated facility in Greater Noida and bring premium quality sweets at affordable prices to the next billion Indian consumers. Backed by investors from across the globe, Urus aims to blend manufacturing excellence with made-in-India innovation, capturing the sweet spot of Bharat's growing aspirations. Joining me now to discuss the plan to take a big bite out of India's very competitive confectionery market is Rajesh Suneet Jain, the founder and CEO of Urus Confectionery. Also with me, my colleague Ritu. Rajesh, thank you so much for taking time out and being here with us on Startup Street. You know, Urus is entering a market long dominated by legacy multinational and regional players, right? So what's your larger vision for the brand and how do you plan to differentiate Urus in such a competitive confectionery landscape?
Thank you so much, Arundhati and Ritu, for having me on this show. It's a privilege to be part of this conversation. See, we are a manufacturing first brand and we are setting up a 40,000 square feet facility. I think there is no better time right now than to make in India. So what will help us differentiate versus the legacy brand is the capability to cater to aspirations of India 2 and India 3. There is also a large market of unorganized players, which are approximately 50% in Tier 2 and Tier 3, which do not cater to the aspirations of these people. And this is the gap which we are plugging in with this fully automatic facility and the capability to reach and establish a very strong distribution system across North and Northeast of India.
Well, hi, this is Ritu stepping in. You know, you said it. It's a large unorganized market that is widely prevalent in this rising Bharat, next billion Indian consumers that you're looking to target. I mean, what are you going to do to capture a larger share there? I mean, what kind of gaps that you spoke about, what are you going to do to fill those?
So our fully automatic facility allows us to make superior products with high quality ingredients, which plug in that gap from a consumer aspiration perspective, both in terms of taste, quality, hygiene, as well as shelf life. And yes, as I said, there is no better time to make in India right now. A fully automatic facility ensures that versus all these large unorganized players, we are well differentiated. Please do keep in mind that India 2, which is Tier 2 and Tier 3, also have aspirations. And most of the brands which are coming in right now are only catering to Tier 1 markets. India 2 also desires good quality products, but at affordable pricing.
So as you've pointed out, this fully automated manufacturing facility, which is going to be in Greater Noida, is very central to your growth plans, right? When can we expect commercial production and what's going to be the capacity at this production facility?
We are targeting Jan 26 for commercial production. We are an ambitious brand and we are putting a capacity of 100 crores in terms of net sales value in the phase 1 of our venture. This will also lead to creation of 100 plus direct and indirect jobs, staying true to the vision of Make in India and actually impacting the local ecosystem with one district, one product. And that's one of the reasons we have got funding from State Bank of India, very strong support from Invest UP, as well as Fireside Ventures, which is typically a pre-series to a Series B and a Series C kind of a venture capital firm.
All right, a Republic Day launch, for your factory there. Could you tell us about what kind of products we should expect under the Urus brand? And, when you're talking about pricing for the Bharat market, how are you going to blend in affordability with premium quality and taste that you're sort of talking about?
With respect to the products, I think you'll have to be slightly patient. Come December, Jan,
Okay.
I would love to send samples across to you as well as the other media which is there. With respect to premium ingredients, so we are in the price range of 20 rupees up. And that's the convenience price point which we are targeting for Tier 2 and Tier 3. That gives us some flexibility in terms of ensuring premium quality ingredients are there. there is also a lot of operator experience on board. So, for example, I being the founder have 15 plus years of sales and marketing experience. In previous organizations, I have built 300 to 500 crore brands. My other co-founder, Prashant, has very strong extensive experience of commissioning projects worth 500 to 600 crores. So that's something which bulk manufacturing is able to achieve, or if I were to reframe it, scale manufacturing is able to give unit economics, which ensures a profitable growth and a per monthly EBITDA positive kind of a P&L.
Well, let's talk about that. How sweet is your profitability going to be? What's your current revenue run rate? And now with these ambitious plans you have, what kind of targets do you have both for revenue growth and the kind of profitability you can target for this year and beyond?
Thank you so much for asking this question. And by answering this question, I also represent the large center of people who want to go into entrepreneurship but are slightly scared as well. This is a pre-stage idea funding. So we are establishing our revenues. We are not on any revenues at this point of time. And that tells you about the investor confidence in terms of 20 plus crores being invested for a pre-revenue company in a manufacturing first startup. That's one. Second, with respect to our ambitions, I think we'll try to achieve product market fit for the first 2 years or less. And that's when we will look at expansion. Of course, with Fireside, State Bank of India, and the marquee HNI Angel Network, which is there, I don't think funding is going to be an issue or expansion is going to be an issue. The confectionery market in India itself is projected to be about 50,000 crores by 2033. So I think there's ample room for growth, and India too is the next big opportunity which stands with the set of entrepreneurs which are entering the food manufacturing space in India.
Absolutely, it is. It is a big opportunity out there, and we wish you the best with it, Rajay. Thanks very much for your time here today. On that note, we're going to wrap up this edition of Startup Street. Thanks for tuning in. More news and updates will come up on the other side.